You're ready to invest your money and you want to maximize on your profit. Which one is best, real estate or stocks?
We personally chose real estate.
Yeah, so make sure to check out this video and stay right till the end because we're going to tell you one benefit that only exists in real estate.
We are the investor couple.
I'm Mel.
And I'm Dave.
And we're the Investor Couple. And you're watching Real Estate versus Stocks. On this channel, we teach real people just like you the secrets to time freedom, location freedom, and financial freedom through real estate investing.
New tips every week, so please make sure to subscribe.
And don't forget to hit that bell to be notified of every new video every single Thursday.
We decided to make this video because so many people continuously ask us, should I invest in real estate or should I invest in stocks? So this question, as I said, comes up all the time.
We're real estate investors. That being said, we're going to stay neutral and give you the benefits and cons of both today. At the end of the day, this is about finding out what is best for you so you can put your money to work.
We are going to start off with a massive section of stock purchasing, algorithms, and this is something that you cannot beat. In the stock market, they have computers, they have algorithms that are buying, selling, trading, shorting, everything to do with stocks millions of times per second, okay? That doesn't happen with real estate investing, and that is something I truly want you to think about. Can you compete against a computer that reviews itself a million times a second? I don't think so. I know I can.
No, absolutely. That's a difference, right? With stocks and algorithms, how do you compete with that, on-time delivery, that second response and updates, right? We don't get that with real estate.
Now, if you go to real estate, some of the bigger, massive buildings, you are going to be competing against some big firms, some insurance companies, because they like to scoop up those big buildings. If you're a real estate investor and you're looking for the typical buildings that people look for, a single family dwelling, an apartment, a condo, a duplex, triplex, fourplex, anything, with multiple apartments, you're going to be competing against other real estate investors, okay? And yes, they have knowledge and experience, but they're still not a computer. They're still not doing it a million times a second.
It's not easy to compete with artificial intelligence.
Speaking of algorithms, if you want to help ours, give us a like.
So that was the first point. Now we have many more for you, and I feel they get stronger and stronger, especially the last two. So make sure to stay right till the end.
So number 2 is barrier to entry. And this is vastly different, okay? So we're going to go over it, and we're going to talk firstly about the stock market. Anyone who has, let's say, $50 in their pocket, $100, $1,000, they can go somewhere, a financial institution, they can go to a broker agency, and they can open up an account to start trading on the stock market. Now, I'm not going to talk specific stock markets, I'm just going to talk generally overall. Now, that is a very easy barrier to entry. You could probably be, maybe 1 to 2 days, if there's a little bit of hiccups or you need to provide some information, but you're probably trading within a day or two.
Yeah, it's something you can do very, very quickly and get results quickly as well. Now, let's talk about real estate. The difference can be more night and day. Here's a list that you'll actually have to accomplish in order to buy real estate. Determine a market you want to invest in. Learn how to find and analyze income properties. Build your real estate investor focused team. Now this includes lawyers or attorneys, accountant, real estate and mortgage brokers. Qualify for financing. Now you're going to have to come up with at least 20% down payment, and don't forget about those expensive closing costs as well. Do your due diligence. This includes inspection and zoning. Closing date. Now you actually have to wait to take possession of this asset.
So as you can see from that extensive list, the barrier of entry between stocks and real estate is vastly different. Now, we're not saying one is better than the other, we're just informing you of how long it can take. So that list that Melanie just read to you can probably take weeks and weeks or months and months to actually get into real estate.
Yes, so you're gonna have to be a little bit patient if you want to invest in real estate. And the reason we decided to do so is because of the last points that we're gonna be going over with you shortly. 100, 200, 300, day 2, and I already made $300.
I haven't even found a realtor yet and you already made $300?
Let's talk about controllability. Do you want to be in control of your finances, or do you want to let somebody else do the day-to-day?
because these are two vastly different concepts, and you need to be comfortable with who you are. Do you want to just say, hey, here's my pool of money, I put it somewhere, I let someone else manage it, and then whether I get a good return or bad return, that is the outcome. I had no particular play in the outcome. Or do you want to be hands-on where you oversee? You make decisions and it's your call, and it's up to you whether it makes money or doesn't make money.
Yeah, when I was younger, let's say in my early 20s, I think I was like, somebody else manage it, I'm not sure what I'm doing. But then I became more confident and I thought, wait a second, why am I letting this stranger manage my finances?
So now let's break down both. Let's begin with stocks. And you might say, Dave, if I pick my own stocks, then I'm controlling it. So what are you talking about? I agree. If you pick your own stocks and you're not using a stockbroker, yes, you are somewhat having a decision into what you're investing in. Now, that being said, just because you pick a stock in a certain company doesn't mean you have a say in that company. And that's what we're talking about. Because the CEOs, the executives, the managers, the shareholders, they are the ones that are controlling ultimately what that company is doing. You are only buying a stock into that company. So yes, you control where you buy, but you still don't control the actual investment of the company, okay? So that's what I mean by that. Now the broker, you can invest in them and then they will decide where they're gonna put your dollars, into which stocks, into which companies, which again is you're even more removed from your investment. I'm not saying either way is good or bad. I just want you to understand the different types of management styles that you can have when investing in stocks.
Now let's talk about real estate. Real estate gives us control. Essentially, you become the CEO. And what do I mean by that? For example, if you want to do renovations, if you put in $20,000 and you can get a huge lift of $60,000, you get to choose that. You also get to choose who's going to manage it for you. Are you going to manage it yourself? Are you going to have your internal staff? Maybe you're going to choose a property management company. Again, you are in control of the situation. And finally, you also get to pick your tenants. Now, if you want to be hands off, maybe you're not the one choosing the tenants, but again, you're still in control. You're the one picking who's going to make those decisions on your behalf, as opposed to throwing it out there and you're not really sure what's going on. Bottom line here, there's no right or wrong. You just have to consider these options and choose what's best for you. Now let's talk about the 4-letter word.
What? No, you can't say the F word.
I'm not talking about that. Debt.
Oh, debt. That is a beautiful word actually, and I want you to not think of it as a bad thing. Debt is basically leverage, and let's talk about leverage with stocks and real estate.
Now try this. Walk into a financial institution and ask them for, let's say, $250,000 so you can go and buy stock. Do you think that's gonna work? No! Clearly, this can't be done with stocks. However, with real estate, you can fully finance your deals. We've applied this strategy over and over again and now solely own over 200 units.
Hi there, I'm here to apply for a mortgage for my stock portfolio.
Now with stocks, you need to utilize your own funds, which again is fine. But if you want to truly leverage, I think this is where real estate investing wins. Because real estate investing, you can go into the bank and say, hey, Mr. or Mrs. Financial Institution, I would like you to give me 70, 75, 80% of my purchase. That'll be the lion's share of the amount of money you need to purchase it. And like Mel said, there's also creative financing to bridge the gap. This is where real estate truly wins. Debt equals leverage, and leverage allows you to purchase so much more.
Now that you have this info, I'm curious, comment below which one you would prefer.
Liquidity, stocks and real estate could not be any more polar opposite.
Mel, that's bang on. With stocks, it is so easy. You could be sitting at your computer in your underwear and sell your entire portfolio of
We
stocks.
won't take a picture of that, Dave.
But that's literally how easy it is. It's a click of a button. You can sell your entire portfolio, wash your hands of it, take your money, and be absolutely done.
Now, real estate, what do you need to do to liquefy your asset? Contact a realtor and list your property. Viewings. You might sell your property on the first one, or it might take months and lots of viewings. Offers, same thing. You might get one offer, you might get multiple offers. Once you accept the offer, then you have to wait until the conditions are fulfilled. And afterwards, you gotta wait again. You gotta wait till closing.
So after seeing the vast difference between both of them, again, this will be your choice but we just wanted you to know that one is easy in, easy out, and the other one will take time to get in and will take time to get out.
Now for the grand finale.
Taxes. It always comes back to taxes. And why is this important? Because you can make money, but if you're giving it to the government, what is the point?
What's the point?
Most of the time when you make money in the stock market, it will get added to your personal income. And then it will get taxed at your personal income rate. With that, you won't have many tax saving ways because it's strictly income, okay? So know this going into it. I'm not saying it's a bad thing, but know that the tax advantages or the tax strategies will be very limited with this.
This was probably the biggest factor why we chose real estate.
Now with real estate, you can do so many different things. You can open corporations, you can have the income flowing into that one, you can have the income flowing into another entity, you can do depreciation. You are giving your accountant so many different ways to make that income disappear legally. Now this is done with expenses, different corporations, different structures. There's also depreciation. This is just touching the iceberg. With real estate, there's a vast majority of ways to help you tax-wise.
Now that you have all the information, which one are you choosing? And if you're choosing real estate, check out this next video where we're going to compare short-term versus long-term rentals. I'm Mel.
And I'm Dave.
And we'll see you there.